Hey traders, welcome to today's video. In today's video, I want to share with you about the Martingale strategy. Should you be using it when it comes to Forex trading? Now, the Martingale strategy is a gambling strategy which gamblers like to use. And in today's video, I want to show you whether it is actually helpful. Is it a good money management tool that you should be incorporating into your trading? Now, just in case you do not know what the martingale is, the martingale strategy is whereby basically you bet a certain percentage of your account, and if you were to lose that trade, what you do is that you double up. So in this case, I have an example for you. You can see that let's suppose that you risk 1% of your account on the first trade, and you lose money in that trade. So what happens is that your next trade you're going to double down. So you're going to do 2%, and if that trade loses money as well, you are going to double down again. So you can see 1% to 2% is times 2. 2% to 4% is times 2 again, and 4%. If you lose again, you're going to bet 8%, and if you lose, it's going to be 16%, and so on and so forth. Okay, but here's the thing. Let's say if you were to win, let's say after maybe 3 trades of losses, you finally win, you go back to betting 1% of your account. Okay, this is one of the most common forms of martingale betting strategy. But there are many other variations. There are other variations such as like let's say the first trade you bet 1% and you made money. Then your second trade you bet 2%, and if you made money again, you do 4%, and so on and so forth. But in today's video, I just want to show you, a brief overview of the martingale strategy and share with you my thoughts about why you should not be using a martingale strategy. Okay, in theory, martingale strategy sounds very good because you only need to win just once. Okay, think of it this way. Let's say you bet 1%, and if you were to lose, you bet 2%. If your 2% trade wins, what happens is that you are in profit and you cover back your losses. So it sounds really, really good. So, there are a lot of people who preach this. There are a lot of YouTube channels which tell you that you should be using martingale. But I think, as an educator, if you've been following us, we are always wanting to tell you the truth about trading. So this is actually a very dangerous concept. Okay, it's very, very dangerous. So let me show you why it is very dangerous. In fact, it's one of the fastest way to blow your account. So please do not use a martingale strategy. It's the fastest way to blow your account. Please run away from any strategy, any algorithm, anyone who tells you use a martingale strategy. Okay, people who tell you to do martingale strategy do not have your interest at heart. Okay, they could be an introducing broker. They could be the brokerage who they are betting against you and they want you to blow your account. Okay, so if you're in this channel, you know that we really want to help you. Okay, we're here to serve you, and that's why we tell you the truth. Okay, even if you do not want to hear it, this is the truth. Okay, the truth is that a martingale strategy will blow your account. Okay, it's not the right way to trade. It's not a good money management strategy that you should be using. Okay, so if you are enjoying this video so far, really appreciate you could just take 3 seconds to like this video, right? Help us to reach 100,000 traders, right? We want to impact 100,000 traders. You can see that we create this video and tell you the truth, right? Because we really care about your success, and we are doing all we can to help you become a better trader, right? So really appreciate you just take 3 seconds to like the video, hit the subscribe button, and turn on the bell icon because you wouldn't want to miss a video that we create. Okay, we create a video such as this almost every single day. Okay, we also have a 3-day trading guide, so make sure you download it. The link is in the description. Okay, it's completely free. It's meant to help you get started in trading, especially if you are new to trading. Now, the martingale strategy assumes that you have infinite capital. Okay, meaning that if you had $1 billion, then you could do this because money will never be a problem for you. You can always put more money in. But let's talk about in reality. Okay, each of us have finite resources. I'm sure you don't have $1 billion in your bank account, right? You have a limit as to how much money you can actually put down, and you also have your own risk tolerance. Okay, let's take an example. Okay, let's say that you risk $100 at the start. Okay, and you apply the martingale strategy. Okay, earlier on I mentioned that the martingale strategy involves a doubling down on each trade every time you get it wrong. So let's say in this case you are really unlucky. You get 10 losses in a row. Okay, now before you say that you are not going to get 10 losses in a row, let me tell you. Okay, as a trader, I've been trading for more than 16 years. This will happen to you. If you've been trading long enough, you know that getting 10 losses in a row is a certainty. It's going to happen. One day it will happen. So it's not, whether it will happen, it is when it will happen. Okay, so please, 10 losses is not It's not uncommon. It happens. Okay, if you've been trading for some time, 10 losses is likely to happen once in a while. Okay, it may not be that often, might be once every 3 years, once every 5 years, doesn't matter. But the one time that it happens, it's going to blow your account. It's going to damage your bank account. So please do not do that. So back to this example. Let's say you start with $100 and you risk $100. Let's say you are wrong. You bet $200. Let's say you're wrong. You bet $400. You're wrong. 800, 1,006, 3,002, 6,004, 12,008, 25,600, and 51,200. So you can see that your losses really compound very fast. Of just betting of $100, if you do 10 trades, your last trade you need to bet $51,000 just to recoup your $100 of losses. So it just doesn't make sense. Okay. So every time you double down, right, what happens is that your risk to reward gets worse. In this example over here, I have 10 trades. Okay, let's say you lose 10 trades in a row. On your 10 bet, okay, on your this bet over here, okay, on your 10 bet, which is a bet of $51,200, you are basically risking $51,200 to earn $100 and recover back your losses. Now, question is, does that sound like a good risk to reward to you? Personally, I think it's no, right? In fact, everybody should agree that it's no, it's not a good deal. Okay, the idea is because when you win this, you're actually covering the losses for all these losses. Okay, if you add this up together, you will find that you'll be in a slight profit. Okay, because you need to cover these losses. But what happens if, let's say, even if the 10 trade you carry on losing money, then you need to double it up to 102,400, and that's a lot of money. Okay, most people do not have this kind of capital to keep deploying double down. It's not logical. Okay, so please hear it from us. Okay, please do not apply a martingale strategy to your trading account, right? Because it will really blow your account. Okay, it sounds good in theory. Okay, in theory it sounds awesome. There are a lot of people pitching you that you should be using a martingale strategy, but whenever we have subscribers write into us and they ask us about this kind of things, we get very concerned because we know that there's only one outcome when you use a martingale strategy, and that is you lose a ton of money. Okay, most of the time, if people do a martingale strategy, even if they make money, what happens is that they get greedy and they keep doubling down, even if they are winning, even if they do it this way, where, if they win, they bet 1%, they win, they bet 2%, they win, they bet 4%, they win. Even in this case, what happens is that eventually they get one loss and the one loss wipes out the entire account. Okay, so please do not use this. Now, as always in this channel, I don't just want to tell you what not to do. I want to show you what to do. Okay, what is a better strategy? Okay, I should have mentioned that I want to give you a better strategy, a strategy that is more, it's more stable, right? It's superior compared to the martingale. It's what I call the reverse martingale strategy, which is basically you want to adopt a fixed percentage of your equity. Okay, in the next slide, I will show you an example, but let me just explain how does this work first. Okay, very simple. Now, when your account is growing, meaning that you are doing very well, okay, maybe your account is up 10%, 20%, doesn't matter. Your account is up. You want to raise more money. Okay, from a logical standpoint, you want to do that because, number one, because you're in profits, you can afford to raise your profits. Number two, okay, of course, you want to have a bigger risk or bigger trade when you are killing it, when you are nailing it, you're on point, your analysis is point, you're on fire. Okay, sometimes you see that when we are doing very well on our signals, we'll tend to trade more, we tend to give more signals because we're doing well. So if you're doing well, you obviously want to trade bigger, right? It's just logical. And the opposite is also true. Let's say your account is declining, okay, it's dropping, your equity curve is declining. You want to risk less because when your account is dropping, that means that you're not trading well. For some reason, it could be, the market condition is not conducive, or maybe you didn't have a good sleep, maybe you are going through something psychologically, you're having a breakup, or something that is affecting you and you cannot trade properly. In this kind of scenario, you want to keep your risk smaller. So when you use this fixed percentage of your equity, what happens is that when your equity curve is declining, your absolute risk, means the absolute dollar, right, how much you risk per trade in dollars, will be smaller because you are using the same percentage of your smaller account, right, because the account is declining. Now, if this is confusing to you, let me just go through an example so that you can really understand what I'm trying to say. So in this case, let's say you have $100,000 a trading account over here, and you were to risk 1% a trade. Okay, so 1% a trade is about $1,000. Okay, so let's say you risk 1,000 per trade. Now, you are trading really well, and your account grows to $120,000. So if you stick to this, which is this reverse martingale strategy, which I'm talking about, where you adopt a fixed percentage of your equity. Now your equity is at 120,000. So 1% of 120,000 will be 1,002. So instead of risking 1,000, you are now risking 1,002. Okay, and take in mind that right now you are risking $1,200 when you are having good trades, when you're doing well. So it's very logical that you want to risk more money. Okay, number one, because you made a profit of 20,000, and number two, because you are doing well. Now, suppose from your $120,000 account, something happens, maybe the market conditions change and you start losing money, and you go into drawdown. So your account drops to 95,000. So what do? You are still risking 1% per trade. But in this case, because your equity now is 95,000 and not 120,000, your risk per trade becomes $950. So you can see that if you apply this reverse martingale strategy, what happens is that when the market is doing well, or rather your trading is doing well and you're making money, you are risking more. Okay, you are risking more over here. Okay, you are risking 200 over here. $200 more. $1,200 is $200 more than 1,000. And in this case, when your account is doing badly, you are risking $50 less. So this is how you should manage your money. Okay, this is a better risk management strategy to adopt rather than this martingale strategy, which is sure to blow your account. So please, really, please do not use this martingale. Okay, we really do not want to hear any emails from you guys saying that you blew your account because someone told you to use this martingale strategy. Okay, please avoid this betting strategy at all costs. Okay, so let me just sum up today's video. Right, I started this video by sharing with you what a martingale strategy is. Okay, I also shared with you that you should never deploy a martingale strategy. Right, it sounds good in theory, but it is a fastest way to blow your account, right? I gave you the math behind why it doesn't work, because you basically need infinite capital, and it assumes that your risk tolerance and capital is there, that you're willing to bet, for example, $51,200 to make $100. Okay, it's a terrible risk to reward proposition. So do not do that. Okay, and then I gave you the better strategy that you could adopt, what I call the superior strategy over the martingale, which is called the reverse martingale strategy, where you only increase your risk, your absolute risk per trade when you make money. Okay, and when you're losing money, you want to decrease your risk. Okay, your percentage is fixed. You can use X%. Okay, it doesn't matter what X is, but of course X shouldn't be too big. It shouldn't be like 5% or 10%. It could be anywhere between 1 to 3% per trade of your equity. But what you want to do is that when you are doing well, you want to increase your risk per trade in absolute amount, and when you're losing money, you want to decrease. Okay, that will help you stay alive when you're in a losing streak, right? It will not blow your account. And if you follow this strategy, it's almost impossible for you to blow your account. Okay, because every time your account goes down, you are risking less and less and less money as you trade. Okay, so this will preserve your account, and it will literally save your soul. Okay, so please take it from us, right? Do not use a martingale strategy. If you need any, advice on other strategies, right? You have questions like this, please ask us, because we really do not like to receive emails that you guys blow your account, right? We feel that if we have the knowledge to help you avoid this kind of scenario, we will record a video. Okay, even if it's just one person who have this issue, we will record a video just for you. Okay, so please leave a comment down below if you need any help, right? If you have any questions about this strategy, right? Please give us a thumbs up at the same time, right? Hit the subscribe button and turn on the bell icon. Okay, if not, thanks for watching. I'll see you in the next video.